And Dan, I think you agree with what Jim just said, right? You were concerned about the potential for a sell-off of as much as 20% when things got down to about 12%, down 12%. You said that maybe that was time to jump back in, but now you're thinking that there could be some more rough patches to come. Is that sum things up correctly?
Absolutely, Becky. I mean, if you go back and you look at time, bear markets, which I define as periods where the market's down, let's say closer to 30%, and there's about 10 of those episodes since 1920. If you go back and you look at those periods, you end up with these big bear market rallies in between. So the most comparable period, I think, is when Paul Volcker took over, 1980. You had a sell-off that started as he started to battle inflation, and the market went down 27% over a period of 21 months. But you had 6 rallies in the S&P of 8% on average, while you lost 27% of your money. And if you look at the 3 pretty high inflationary episodes, that's kind of what happened each time. You have these big rallies in between these drawdowns. And at the end of the day, inflation remains high. The Fed hasn't even started hiking yet or cutting their balance sheet and letting it run off. And that's still in front of us. And valuations are still near record levels. And so you combine all of that and slowing growth because of high energy prices, high wages, high rents. And I think it's way too early to say that this is the bottom, though obviously I thought it was a short-term bottom, just given the oversold conditions.
You are looking for best performers to come from where they've been coming from for the last month or two. Oil prices have really been on a rise. You are looking at USO, which is the United States Oil Fund, an ETF, as your top pick for right now. How high do you think oil prices are going to go?
Well, unfortunately, I think they're going to go higher for 2 simple reasons. One is I 100% believe by the end of this year, we'll be talking about COVID, much like we talk about the flu, which is endemic. The flu kills 30 to 40,000 people every year. It's an acceptable risk of living life. And I think that's where we're going to think about COVID. And if you believe that, then hopefully by this vacation time next year, I'll be sitting on a beach in Hawaii, having taken a flight, staying in a hotel. And that's going to drive the demand of oil up. At the same time, environmental concerns are going to keep drilling permits down. And so that's going to restrict supply. And there's not a lot of spare capacity in OPEC plus either. So I think oil prices are going to remain really high because of it. And that's going to keep putting pressure on inflation in addition to 3 million more jobs than unemployed, which will keep pressure on wages. And 2.5 months supply of unsold homes, which is going to keep pressure on home prices and drive rents even higher a year from now. So, that's kind of how we think through the inflationary pressures and oil in particular.